It's about that time of day again. My name is Joseph James. It's Tuesday evening, November 15th, 2016, and this is your nightly newsletter. We're covering crude oil, S&P, gold, euro, and the DAX this evening, and we're seeing some great volatility as the markets continue to digest last week's election. We got some great trading opportunities setting up for tomorrow. We got some big news on the calendar, some big ranges on the charts. Got another great newsletter in store for you guys and gals tonight. Before we jump into our charts, though, and put the plan together for tomorrow, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're on our YouTube channel right now and you're watching the newsletter on our YouTube channel, it's only a small portion of the entire video with all of the markets and all the analysis. Not to worry, though. There's a link in the description of the YouTube video. Follow that link and come join me on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Download those charts. That's right. You can have all the charts from my video tonight on your computer for tomorrow. Follow that link below the video. Grab your free pass, upper right-hand corner. Got a free pass for you guys. If you're not a member here at School of Trade, get a free pass for all the guests. And of course, don't forget, if you're brand new here to School of Trade, we've got a great frequently asked questions page. Check it out. Learn the who, what, where, when, and why. And don't forget, I'm always here standing by to help you guys out with any questions you may have along the way. What a great week we've had. We knew this week was going to be filled with some fireworks coming out of last week's election. First full week here, back here, post-election, and of course, it definitely has not been a disappointing week so far. I hope you guys have enjoyed the newsletter so far. The big day coming tomorrow. Tomorrow's Wednesday, November the 16th. We have no major news coming out in the overnight session tonight, so nothing to worry about in the overnight session tonight. Tomorrow, though, we do have a plethora of news coming out here, starting at 4:30 in the London session, the labor market report tomorrow, then, of course, into the 8:30 a.m., 9:15, 10 a.m., and of course we can't forget about that 10:30 inventory report. So news tomorrow morning starts off tomorrow morning at 4:30 a.m. I don't expect that to be a huge mover that early in the day, but we do have it on our radar, so we do want to keep that in mind. The big news tomorrow, definitely starting off in the U.S. session. PPI at 8:30, industrial production at 9:15, housing market. We are going to get a very diverse look at just how this economy is doing here in the U.S. PPI, we'll talk about inflation at 8:30. We'll talk about manufacturing at 9:15, the housing market at 10 o'clock, right? It's going to be a busy day for analysts tomorrow, which means it should be a very busy day here for us as well. Also, don't forget, tomorrow is inventory day here on crude oil. We're also keeping an eye out on rollover. As we talked about in last night's newsletter, we're watching volume right now between the 12.16 and the 1.17 contract. It doesn't look like tomorrow's going to be rollover, but remember, make sure you take control of your own trading. Watch that volume tomorrow between the 12.16 contract and the 1.17 contract. Once the January 2017 contract is higher volume than the December 2016 contract, that is your green light to make the move over to the new contract. If you're with me tomorrow in the trade room, we'll do it with all of our students in real time tomorrow morning at 8 o'clock Eastern time. So we'll do this together with all of our students. Talking about crude oil, though, don't forget inventories tomorrow at 10:30 a.m. Eastern time. I always give that specific news report a 15-minute buffer. 15 minutes ahead of the news tomorrow morning. That means as of 10:15, we're sitting on hands for trading crude oil. S&P also has been a bit of a shadow for crude around these inventory reports, so make sure you're watching crude and the S&P 500 tomorrow around 10:30. But again, I like to give it that 15-minute buffer. 15 minutes before and at least 10 minutes after the news comes out to let that crazy whippiness subside, and then we're back to the races afterwards. We'll talk about tomorrow night's news once we get there, but keep in mind, though, got a whole big plethora of news reports coming out starting off tomorrow morning, 4:30 a.m., going all the way until 10:30 a.m. It's going to be a busy day in the U.S. session for tomorrow. And again, don't forget about contract rollover on the old crude. Let's keep going. Get some charts ready to go here for us. We'll go crude, S&P, gold, euro, and we can't forget about the old FDAX. Let's start here tonight first with crude oil. And again, I'm going to be on the 12.16 contract here for crude tonight. Be aware, though, tomorrow, the minute we start seeing that 1.17 contract take more volume over, Right, we'll start trading that 117 contract tomorrow. I don't think you're going to have to worry about it too much tomorrow, though. We'll be talking probably about that tomorrow night. Let's jump right in. Crude is bullish and trading at the completion of both the measured move and the bull wedge this evening, which tells us the bulls have control, but the most reliable buying opportunities will come after a deep pullback off the highs to allow the buyers to participate in this trend without buying the high. Sellers need to stay patient at this point, waiting for a very strong move. Keyword is strong move lower that can hold a pullback. And beware trading in tomorrow's inventory report at 10:30 a.m. Eastern time. As you can see here right now, the real obvious clue on this chart tonight is this bull wedge. At first glance, it looks like a bull channel, but it's definitely a bull wedge. You can see the highs here are not rotating right up to those highs. So it's definitely a bull wedge. The very first thing I think about when I see a bull wedge is to look for a trading range to develop at the end of that wedge, right? Look for a trading range to develop at the end of it. The reason is that when we get to the tip of that wedge, it's a major milestone. It's a major market objective. We're also running right into the measured move, as you can see, at that 45.77. So the buyers got what they were hunting for today. They made it to the end of the wedge, and they made it to their measured move. Now, what is it going to take to get more buyers involved? Think about it this way. The buyers who got in earlier today, they're taking their money out of the market. They're fat and happy. They're not going to want to buy more here. The only way to get buyers to re-engage in this market and participate now is going to be one of two scenarios. First, a strong move higher, right? In other words, we need to see a strong enough move higher for these buyers to get the buyers to think we must be looking for another milestone, right? That next milestone will be that double up. That next milestone will be that API. And if you want to go out on a limb here, this may not be as accurate for tomorrow, but a triple measured move, right? So kind of run that triple measured move up here. I should have put that on there already. Sorry about that. 46.92. We'll call that right around $47 even, right? 46.92 there. And again, that'll be for your triple measured move. Keep in mind, if it pulls back further, we'll have to move that triple measured move lower. All right. I'm drawing that triple measured move off of this low, right? So that's where I'm getting that triple. So buyers got their target today. They reached their objective. What is it going to take for them to re-engage? What's going to take for them to buy more? It would take for me to buy more right now. It'll take a very strong move higher, telling me now that it's safe now to be buying pullbacks because now the buyers are hunting for another objective. Now, as we go higher, the two most important targets overhead are going to be API inventory resistance at 46.58, and then of course that triple measured move up there at 46.92. That's one scenario, right? Strong breakout pullback. What would be the next scenario? Much more desirable. A pull back to an area of support, right? And then buy from there. If the buyers got their objective today, what's going to get them back in tomorrow? It's a bull market. What always attracts a bull? Lower prices, right? Price has to pull back. So we either need to see a strong breakout that tells the buyers, you better not wait, you're going to miss this, or we want to see a pullback out to areas of support. Now, a couple areas of support here you want to be thinking about right now. As you can see, I've drawn this trend line up, and that definitely fits really well at those highs, which leads me to believe we may get some cherry picking off a kind of a anticipated trend line right at these lows. If I had to guess, though, I would guess in and around this area right here. You've got a very clearly tested reversal line, but that obviously will come into play 45.31, the API support at 45.11, 44.85. These are going to be the areas where you really think most of those buyers would love to see this price pulling back. So if you're with me on the bull side right now, either waiting for a pullback back to areas of support. Don't forget, we teach all of the entry triggers inside of our advanced course, right? Pulling back into support, or it's got to be a real strong, right? Again, the key word here is real strong. Get that moving average up. Get that very strong break higher. It's got to be strong because it's the only way you're going to get buyers to take the bait and be confident, right, to keep buying here. What if you want to be a seller on this market? What would it take for this market to turn? Well, of course, one option here would be we go all the way up, right? We chop around, we break down, and we come back down, right? So that would obviously be one option here. is we wait for the sellers to make, right? We wait for the buyers to finish off their next objective. Then we get that new lower low, hold that pullback, and that will tell us we can start selling back to the downside. As this price goes lower, the only thing that's going to really allow the sellers to be confident with this is strength. Just like we talked about earlier, how it's going to take a real strong move higher to get the buyers to want to buy high, it's going to take a real strong move lower to basically intimidate the buyers from buying into this pullback. Think of it this way. If we just pull back nice and sleepy like, right, and then buyers can come on in and buy that pullback on the way up, you're not going to scare away any bulls by just kind of a lazy, right, stair-step pullback here. But we see this thing really launch lower, hold that pullback. Once we see those sellers hold that pullback, now, right now, you know the buyers are no longer going to be as confident, and that's going to give the bears the wind of opportunity that they need as this price goes lower. Again, it wouldn't surprise me whatsoever to see these buyers dig all the way down into the battle zone. So don't be surprised if you see both sides of this market, right, have some fun with this, right? We could definitely easily see a strong move lower, sellers holding, right, getting a short-term trade into the battle zone, and then, of course, chopping around that 44.85 area, breakout pullback, and then, of course, the buyers here now, right, gobbling it back up and sending it higher. Again, looking for the buying opportunities on the pullback, right, or that strong move higher. Sellers, be careful. You've got to see some good strength if you want to be a bear right now, because this market is clearly on a tear to be a bull. Let's keep going here. Moving on from the crude oil to the S&P 500. The E-mini is bullish after a strong breakout of a triangle from earlier today, but now we're trading at the highs of a channel, also a spiking channel, as you can see, as the bulls are trying to finish off a double up and possibly a test of all-time highs and a triple measured move tomorrow. There are those all-time highs we talked about late last week. The buyers will want to be involved in this move, right? It's definitely a bull market, but wise buyers won't be looking to buy the highs unless they have the stomach for a deep pullback. So when I find myself in situations like these, I focus my attention on looking for traps. Buyers will be watching all the prior swings as this market moves higher, resisting the temptation to buy the high and looking for buying opportunities as sellers try to reverse the trend, allowing them, of course, to buy into those stops of the sellers. Sellers, on the other hand, have a very tough road ahead of them because even a deep pullback will still be seen as a buying opportunity at many levels of support waiting below. This is very similar to crude oil. We're clearly bullish, but look where we are. We're at the high of a channel. We're at the high of a spiking channel, right? We're obviously a bull market, but we're trading up in the nosebleed seats, right? As I've said before many times on this newsletter. The most important clue you can see right now is, of course, the channel you can see on the chart. It's very, very easy to see that channel, and you can see where we are. We're right at the high of that channel. When I see a bull channel, what I want to do is I want to buy the low of that bull channel, right? I want to wait for that price to come back down and then buy, right? And then buy the low of this channel. That's the goal of a bull channel. Buy the low. I don't want to buy the high. What else do we see here? In the short term, a very strong spike higher, and that spike higher turns into a spike and channel. This may be the most important clue going into tomorrow's session. This is where, being now combined with the top of a larger channel and the top of a spiking channel, it's very bullish, which means we can assume that any move lower, right, anything back to any of these prior support levels that I'm marking up here, any pullback here now is likely going to be seen as a buying opportunity. Now, where would the buyers prefer to be buying? They prefer to be buying all the way down at the low of this channel, and they may get that opportunity tomorrow. But the spiking channel puts another kind of layer of aggression on this move. Oftentimes, these spiking channels, you're only going to get, and again, like I said before, right, find these prior swings, right, and then look for that price to pull back. I'll look for seller failure and traps, and then get that move going back up to that high. What I'll do tonight is I'll give you the direction, I'll give you the locations, and don't forget, our advanced course teaches all the specific trade setups and all the entry triggers where you can learn more about the precise entries and exits that we use every day with our students as we execute the strategy in our trade room. So we have our our bull spiking channel. We know the buyers would love to get a deep pullback. We may not get it. All we might get is just a little pullback into the correction zone, a little pullback right into that prior swing. I definitely love the fact that the measured move is here at 72 3/4.